What's up, everyone? Here's something that might blow your mind. Right now, as I'm recording this video, thousands of brand new businesses across America are getting funded through government-backed loans. We're talking about real money, real businesses, and yes, many of them started with zero revenue and less than perfect credit. But here's the crazy part. Most new entrepreneurs have no idea these programs exist. They think you need perfect credit, years of revenue, or some special connection to get funding. That couldn't be further from the truth. I'm going to walk you through the entire process of getting a loan for your new business from the US government in 2026. I'm talking step by step, document by document, exactly what you need to know. We'll cover the SBA programs that actually work for startups, the grant portals nobody talks about, the exact application process, and most importantly, how to get approved faster than everyone else applying. I've helped dozens of entrepreneurs navigate this process, and I've seen firsthand what works and what doesn't. And if you stick around until the end, I'm going to share a brand new SBA rule update for 2025 that's making it easier than ever for startups to get approved. So hit that like button if you're serious about funding your business. Subscribe if you want more finance content like this. And let's dive in. Alright, let's get into the meat of this. I'm going to break down 5 different government loan programs, and I want you to pay close attention because each one is designed for different types of businesses and different situations. This is the most popular small business loan program in America, and for good reason. The SBA 7(a) is government-backed, which means the government guarantees a portion of your loan, making banks way more willing to lend to you. Here's what you need to know. You can borrow up to $5 million. Now, obviously, if you're just starting out, you're probably not getting $5 million. But the fact that it goes that high shows you the potential here. What can you use it for? Pretty much everything your business needs. Equipment, working capital, inventory, payroll, even refinancing existing debt. The interest rates are significantly lower than traditional bank loans because of that government guarantee. Now, here's the 2026 update that changes everything. The SBA has given lenders more flexibility when working with startups that have little to no revenue. In the past, no revenue meant no loan, period. But now, if you have a solid business plan and decent personal credit, you've got a real shot. Also, and this is huge, approval times have gotten faster through what they call SBA preferred lenders, or PLPs. These are banks that have been pre-approved by the SBA to make lending decisions without waiting for SBA approval on every single application. This can cut your wait time from months down to weeks. The catch: you're going to need a solid business plan and a personal credit score that's at least decent. We're talking 620 or higher, ideally 680 plus. Let's say you don't need millions. Maybe you're starting a home-based business, a small service company, or you just need some initial capital to get off the ground. That's where the Microloan program shines. You can get up to $50,000, and here's what makes this program special. The credit requirements are more flexible. If your credit score is in the 500s or low 600s, you're not automatically disqualified like you would be with a 7(a) loan. The application process is also simpler. You don't apply directly through a bank. You apply through nonprofit intermediary lenders that the SBA partners with. These organizations actually want to help small businesses succeed, so they're more willing to work with you if your situation is a little unconventional. I've seen people use microloans to buy equipment for a cleaning business, inventory for a small retail shop, or even just working capital to cover their first few months of expenses while they build up customers. For real assets, this one's specialized, but if it fits your business model, it's incredibly powerful. The 504 loan is designed for purchasing long-term fixed assets. We're talking real estate, buildings, or major equipment. This is perfect for restaurants buying commercial kitchen equipment, manufacturers purchasing machinery, or retail stores buying the building they're operating in. The interest rates are typically lower and fixed for the life of the loan, which means you've got predictable payments for 10, 20, even 25 years. If you're making a major capital investment in your business, this is the program to look at. The hidden gems here's where it gets really interesting. And honestly, this is where most people miss out. Every single state has its own small business loan and grant programs, and they're often easier to get than federal programs. California has the iBank program. New York has state-backed small business loans and grants. Texas has the Product Development Fund. Florida, Illinois, Pennsylvania. Every state has something. And here's my pro tip. Go to Google right now and search your state name plus small business loan program. You're going to find programs you never knew existed, many with lower requirements and faster approval than federal programs. Some of these state programs are specifically designed for minorities, women-owned businesses, veteran-owned businesses, or businesses in specific industries. Don't sleep on these opportunities. Okay, I need to be really clear about grants. Grants are NOT loans. They're free money you never have to pay back. Sounds amazing, right? It is, but there's a catch. They're incredibly competitive and the application process can take months. The main portal is grants.gov. That's the official federal grant database. You've also got the Small Business Innovation Research Program called SPUR, which is great for tech and research-based businesses. The Minority Business Development Agency has grants specifically for minority entrepreneurs. And if you're in a rural area, the USDA has Rural Business Development Grants. My honest advice: apply for grants, absolutely. But don't count on them as your primary funding strategy. They're slow and competitive. Government loans are faster and more reliable. All right, now that you know what's available, let's talk about what you need to actually get approved. This is where most people either make it or break it. A solid business plan. I cannot stress this enough. Your business plan is the foundation of your entire application. Lenders want to see that you've thought this through, that you understand your market, and that you have a realistic path to profitability. Your business plan needs to include an executive summary. That's a one-page overview of everything. It needs market research showing you understand your industry and your competition. You need a clear revenue model. How exactly are you going to make money? And you need financial projections for at least 2 to 3 years. Now, I know what you're thinking. How do I project revenue when I haven't made any sales yet? Great question. You base it on industry averages, comparable businesses, and conservative estimates. Don't promise you're going to be $1 million business in year 1 unless you have serious evidence to back that up. Lenders can smell BS from a mile away. If you need help creating a business plan, the SBA has free templates and even free counseling through SCORE, which is a network of volunteer business mentors. Use these resources. Let's talk about the elephant in the room, your credit score. For most SBA loans, lenders want to see a 620 or higher. For the 7(e) loan, realistically you want to be at 680 or above to be competitive. If your credit is below 620, don't panic. The Microloan program is more forgiving, and some state programs have even lower requirements. Here's what you need to do right now if your credit needs work. Pull your credit report, dispute any errors, and for the next 90 days, do not miss a single payment on anything. Not your car, not your credit cards, nothing. On-time payments are the fastest way to boost your score. Not every loan requires collateral, but many do, especially larger amounts. Collateral is basically assets you pledge against the loan. If you can't repay, the lender can seize those assets. Common forms of collateral include equipment you're buying with a loan, inventory, vehicles, or real estate. Some lenders will accept a blanket lien on your business assets, which just means they get first claim on everything if things go south. Here's the thing though, for startups, lenders often accept personal collateral. That might be your home equity, your car, or personal savings. I know that sounds scary, but remember, the SBA guarantee reduces the lender's risk significantly, so they're not always demanding full collateral coverage. This one surprises people. Lenders want to see that you have experience in the industry you're entering. If you're opening a restaurant, have you worked in restaurants before? If you're starting a construction company, do you have a background in construction? This doesn't mean you need 20 years of experience, but having some relevant background shows lenders you understand the challenges you're going to face. If you don't have direct industry experience, you can compensate by partnering with someone who does, hiring experienced staff, or showing extensive research and training you've completed. You need to be a legitimate business entity. That means you need to register as an LLC, corporation, or partnership. Sole proprietorships technically work, but LLCs and corporations are strongly preferred because they show you're serious. You also need an EIN. That's your employer identification number from the IRS. Think of it like a social security number for your business. And you need a business bank account, separate from your personal accounts. This shows you're treating your business professionally. This is the section you've been waiting for. I'm going to walk you through exactly how to apply for a government-backed business loan, step by step. Before you even think about applying for a loan, you need to make your business official. File your LLC or incorporate. whichever makes sense for your situation. Most new businesses go with an LLC because it's simpler and provides liability protection. Get your EIN from the IRS. You can do this online at irs.gov. It's completely free and takes about 15 minutes. Then open a business bank account. Shop around for banks that cater to small businesses. Some banks offer free business checking for the first year or two. Deposit some money into that account, even if it's just a few $100s. You want to show that the account is active and that you're separating business and personal finances. This is where organization becomes critical. You're going to need several documents, and having them ready up front will speed up your application dramatically. First, your business plan. We already talked about this, but make sure it's polished and professional. Second, your personal tax returns for the last 2 years. Yes, they want to see your personal returns even though this is a business loan, because you're the one guaranteeing it. Third, personal and business bank statements for the last 6 months. They want to see your cash flow and savings. Fourth, a detailed breakdown of how you're going to use the loan funds. Don't just say working capital. Be specific. I need $20,000 for inventory, $10,000 for equipment, and $15,000 for marketing and operating expenses for the first 6 months. Fifth, your resume or professional background. This goes back to the industry experience requirement. Show them why you're qualified to run this business. If you already have any business financials, include those too. Even if you've only been operating for a few months, showing actual revenue helps. Here's something most people don't realize. You don't apply directly to the SBA. The SBA doesn't actually give out loans. They guarantee loans that are made by banks and credit unions. So you need to find an SBA-approved lender. The easiest way to do this is through the SBA's Lender Match tool. Go to sba.gov and look for Lender Match. You answer some questions about your business and your needs, and they'll connect you with lenders in your area. Now here's the insider tip. Look specifically for SBA-preferred lenders. Those PLPs I mentioned earlier. These lenders have delegated authority from the SBA, which means they can approve loans faster without waiting for SBA review on every application. Some of the big national banks are preferred lenders, but don't overlook community banks and credit unions. They often have more flexibility and are more willing to work with new businesses. This is it, the moment of truth. Most lenders now have online application portals, though some still prefer in-person meetings. You're going to submit all the documents we talked about: your business plan, tax returns, bank statements, financial projections, and personal financial statement. The personal financial statement is basically a snapshot of everything you own and everything you owe. Your assets minus your liabilities equals your net worth. Be honest here. They're going to verify this information. You'll also specify exactly how much you're requesting and provide a detailed use of funds statement. After you submit, the lender's underwriting team goes to work. They're analyzing your credit, reviewing your financials, assessing risk, and determining if you meet their criteria. For SBA loans, once the lender approves you internally, they submit the application to the SBA for guarantee approval. The SBA reviews it to make sure it meets their requirements. This process typically takes anywhere from 2 to 6 weeks, depending on the lender and the complexity of your application. Preferred lenders can often do this in 2 to 3 weeks. Traditional lenders might take 6 to 8 weeks. During this time, the underwriter might come back with questions or requests for additional documentation. Respond quickly. The faster you provide what they need, the faster your application moves forward. If you're approved, congratulations! You'll receive a loan agreement outlining the terms, the loan amount, interest rate, repayment schedule, and any covenants or requirements you need to follow. Read this carefully. If there's anything you don't understand, ask questions or have a lawyer review it. Once you sign, the funds are typically dispersed within a few days. Sometimes they'll send it directly to your business bank account. Other times, especially with equipment loans, they'll pay the vendor directly. All right, we've covered the basics. Now I want to give you some insider strategies that most people don't know about. I've mentioned this a few times because it's that important. Preferred lenders can cut your approval time in half. Make this a priority when you're shopping for lenders. If you have 90 days before you need to apply, use that time to optimize your credit score. Pay down credit card balances below 30% utilization. Make every payment on time. Don't apply for any new credit. These 3 things alone can boost your score by 20 to 50 points. If you can generate even a little bit of revenue before applying, It helps tremendously. Even if you've only made $2,000 or $3,000, that shows traction. Deposit that money into your business bank account so it shows up on your statements. Lenders want to see that your business idea isn't just theoretical. It's actually generating interest and sales. This one's huge. Lenders want to see that you have skin in the game. If you're asking for $50,000, but you have zero personal savings, and you haven't invested $1 of your own money, that's a red flag. Even having $3,000 to $10,000 in personal savings or showing that you've already invested in equipment or inventory makes a massive difference. It shows you're committed, and you're not just looking for free money. I see so many entrepreneurs tank their applications with overly optimistic projections. They're projecting $1 million in revenue in year one when they're in an industry where the average startup makes $200,000. Be conservative. It's better to underpromise and overdeliver than to make wild claims that the lender doesn't believe. Show best case, worst case, and most likely scenarios. This demonstrates that you've thought through different outcomes and you have plans for each one. SCORE is a nonprofit organization affiliated with the SBA that provides free mentoring and workshops for small business owners. They have mentors who are retired executives and business owners who volunteer their time. They can help you refine your business plan, prepare your financials, and even practice your pitch. And it's completely free. Go to score.org and find a mentor in your area. If you're getting rejected for larger SBA 7(a) loans, don't give up. Start with a microloan. Get $10,000 or $20,000. Use that money responsibly. Make your payments on time. And then in 6 months to a year, you'll have business credit history that makes it much easier to qualify for larger loans. Think of it as building your business credit score from scratch. All right, we've covered a ton of ground today. Let's do a quick recap. Government-backed loans are one of the most accessible forms of funding for new businesses in America. The SBA 7(a) loan can get you up to $5 million with lower interest rates. Microloans are perfect for smaller starts with up to $50,000 and more flexible credit requirements. The 504 loan is ideal if you're buying equipment or real estate. State and local programs offer hidden opportunities, and federal grants are competitive but worth applying for. To qualify, you need a solid business plan, decent personal credit, ideally some collateral, industry experience, and a proper legal structure. The application process involves registering your business, gathering documentation, finding an SBA-approved lender, submitting your application, going through underwriting, and finally closing on your loan. And remember those pro tips. Use preferred lenders, clean up your credit, show revenue even if it's small, demonstrate personal investment, keep projections conservative, get help from SCORE, and consider starting with a microloan. If you found this video valuable, do me a favor and hit that like button. It helps more entrepreneurs find this information. Subscribe to the channel if you want more content on business funding, personal finance, and building wealth. And here's my question for you. Drop a comment below and let me know which loan program you're planning to apply for or what questions you still have. I read every comment and I'll answer as many as I can. I've also put together a resource guide with links to everything we talked about today. The SBA Lender Match Tool, grants.gov, SCORE, and templates for business plans. Check the description below to grab that. Thanks for watching, and I'll see you in the next video. Now go out there and get that funding.